Welcome to the Biotech Buzz, your go-to source for learning current events about biotechnology and finance. Whether you're someone interested in biotechnology, finance, or both, I'm here to teach you more. My name is Jay Kakadia, and I'm a finance student at Rutgers Business School. Today, I'm going to be giving you guys a tutorial on what biotech finance is and how to analyze a recent deal. We're going to be diving into the deal of Roche acquiring Carmot Therapeutics. To learn more about interesting deals like this, visit my blog, www.thebiotechbuzz.wordpress.com. So, as a brief overview, we'll first be going over what biotech finance is, why it's important, and then we'll be diving more into the deal. So, what is biotech finance? Well, biotechnology companies are engaged in the research, development, and commercialization of innovative medical treatments. So, they make crucial things like vaccines, insulin, and hormones. The latter half of the phrase, finance, refers to the financial activities and investments that are made within the biotechnology sector. This involves either funding, merging, or buying these companies. So, then, why is this relevant? Biotechnology finance plays an important role in driving advancements because it provides biotech companies with the necessary capital to conduct research, develop new technologies, and bring innovative products to the market. Additionally, biotech finance has a significant impact on healthcare and the overall economy, as breakthroughs in biotech can lead to improved medical treatments, disease prevention, and economic growth. Now that we know that, let's talk a little bit about the biotechnology landscape and some recent trends. According to NASDAQ, as of November of 2023, the global biotech market is valued at $1.22 trillion and is expected to grow to $3.21 trillion by 2030. AI and machine learning were the largest trends in recent years, causing this exponential growth. We can now move to dissecting Roche's acquisition of Carmot Therapeutics. So Roche is headquartered in Switzerland, and it's a giant in the biopharmaceutical industry, and it's known for diagnostics and pharmaceuticals. Some popular drugs produced by Roche are Accutane and Actemra for acne and arthritis, respectively. Carmot Therapeutics, which is headquartered in California, produces medicine and treatments for people with metabolic diseases, specifically for obesity and diabetes. So in December of 2023, Roche announced it would acquire Carmot Therapeutics, which was sold for $2.7 billion upfront, alongside a potential $400 million in milestone payments. This means that $400 million would be paid out whenever the tasks that the companies agreed on were completed, such as creating a specific drug by a specific date. So some of the benefits of the deal were that Roche's main reason for performing this acquisition was to compete within the weight loss drug industry, since Carmot Therapeutics' CT388 injection was proven to be one of the best and most stable drugs during trials. And through this deal, Carmot Therapeutics would also benefit because they would have access to Roche's resources to produce more drugs. And this way, Roche would also compete with popular weight loss drug companies like Novo Nordisk, Eli Lilly, and Pfizer. So getting to the finances of the deal, here are screenshots of Roche's financial statements. Because Roche is based in Switzerland, they don't have public financial websites like the SEC, and they report their currency in Swiss franc. So to find this, I just searched up Roche's annual statement, and this was posted on their website. The deal went through to acquire Carmot in 2024, and even without it, Roche's pharmaceutical sector was already really strong, growing at an additional 5.9%. So from 2022 to 2023, we can see that the group net income actually decreased, and it dropped to about $1 billion, $1.33 billion in USD after I converted it, which I assume is the case because their financing costs went way up in 2023, mostly because they financed the acquisition of another company, Telavant, along with Carmot Therapeutics. Lastly, we can move to the EBITDA, or earnings before interest, taxes, depreciation, and amortization, which basically refer to a firm's short-term operational efficiency and tells you how well a company can manage their day-to-day operations. To calculate the EBITDA margin right here, we do EBITDA divided by the revenue. And the average EBITDA margin for a pharmaceuticals industry is between 23 and 44%, meaning 48% is larger, which indicates strong financial performance. Now, how do we get the financials of a company that's traded on the U.S. public markets? So for this, we would go to the website, the SEC Edgar website, search for the company we're looking for, in this case, Carmot Therapeutics. From there, we can click on their company, and we can find all of their filings. In our case, we found the S1, which is made when a company goes IPO or when a private company goes public on the stock market. And what their excerpt is basically saying is that the firm is working at a $65.9 million loss because of their research and development expenses, and that they need more debt and financing to continue to stay operational. So taking advantage of this is when the stronger and financial healthy company Roche took over and bought Carmot Financials, which provided them the funding that they need. So hopefully you guys were able to learn about what biotech finance is and how to analyze a deal. This was a very basic level overview, and in a later tutorial, we can go over specific financial modeling methods to help evaluate whether this is a good investment numerically. For more detailed analysis and discussions on the biotech and finance world, remember to visit the Biotech Buzz at thebiotechbuzz.wordpress.com. Like, share, and subscribe to stay updated with biotech finance.